First of all, hi and welcome. It's good. I see some familiar names as well on the list, so that's always nice. Hi, everyone. This should be a short talk coming in April and how it affects workplace pensions and a couple of options on how you can help your clients offset D&I increase mainly. So hi, everyone. I'm Olga, CEO at Husky. I have here Brendan Chanks with me, the CEO, and we also have Gustavo, our marketing manager. We also have in the background Michael Brown. Some of you might know him. He will be, checking some of the questions on the chat. And probably I can't skip the introduction. I think most of you know about Husky already. So we are the workplace pensions administrators. And as per the agenda here, Brendan will be talking about the key budget changes that affect workplace pensions, especially, the NA increase. We will then talk about how you can help your clients by implementing salary sacrifice or salary exchange. And I will then give a bit of an overview of how we help in terms of software. Then Gustavo and Michael are going to be going through the Q&A. I guess worth mentioning, please, any questions, you can write them on the chat, and Gustavo and Michael are going to be monitoring that. So I guess I can get Brendan started.
Hi, everyone. Thanks for jumping on this call. Hopefully it's not too mundane for you. We don't take you past 12:30, fingers crossed. But yeah, I think we've never seen so much activity in the press around national insurance increases. We have a lovely picture of Rachel Reeves here. But just to kind of probably point out, primarily what we're going to do today is talk about salary exchange or salary sacrifice on pension contributions. So ones around medical, dental, cars, cycle to work, life cover, etc. We're not covering those off. We are really specifically going to talk, hopefully meaningfully, around your actual pension contributions and sacrificing your employee or individual contributions for an employer one. So if we go on to the next slide, we can get the sort of main budget changes that we're going to see in April. So from April 6th, obviously this has been well documented in the press. We're going to go from an employer rate of national insurance of 15% from 13.8, going to lower the threshold, which is a pretty significant moment, I think, where we're bringing that down from 9,100 when it kicks in to £5,000. And then I think the big benefit to employers that's definitely been lost in the press coverage is obviously the allowance, the employer allowance and national insurance allowance has been fairly dramatically increased from £5,000 to £10,500. And now what does that sort of mean in reality? So if we could go on to the next slide. So what we did is very simply took one of our clients with, although we've changed the name to protect the innocent, Morning Limited have 10 employees, all on 35,000 a year. Now, that's probably not quite realistic in reality. You'll probably have a senior management on more money, or potentially, on minimum earnings and taking dividends, etc. So, but we just did this to make the mathematics quite simple, but demonstrate hopefully how you can see how costs have increased dramatically. So this, this employer had a national insurance contribution bill annually of £35,742 previously, or up to April, or at the end of this tax year, and then that's going to go from 35,742 to 45,000. So that's a pretty steep increase, £9,258 of an increase. So that's kind of the example we're using throughout this document, or this presentation. So just to kind of bring home, I think, the message that there's serious things you can do here, particularly with salary sacrifice and pension contributions, that mitigate this increase. So yeah, on that point, effectively, we are very keen to work with you and your clients on, this what we call an overlay of salary sacrifice on your existing pension contributions. So those of you who run payrolls, who have both employee and employer contributions, looking at exchanging those employee ones for employer ones and how that can really make a difference to the employer in terms of saving them that national insurance cost, but potentially also giving some of those savings back to the employee in the form of a pension contribution. I think now, if we just go back to that slide. So the point I think to make here is that this is effectively, coming for us all. It's actually in essence there now. So if you just go back one slide, Olga. Oh, sorry, two slides. So, the slide I wanted is gone. So not to worry. What we're going to show you now, as Olga says, hand over to Olga and do a quick demonstration of how that overlays, your existing payroll and possibly pension uploads that you run today.
Sorry, not sure if
there we go.
That's the one, right?
Sorry, thank you. Sorry, we're muddling the slides here. So thank you very much. There we go. So what we've done here is effectively, try to demonstrate to you that if you implement the salary exchange on your existing this employer's existing pension contributions, change them therefore into employer ones, you're going to save this business £2,685 a year. So, that's a pretty meaningful sum when your costs are kind of rising significantly, albeit you also have this benefit of additional employer allowance. But as I mentioned, one of the key things that often gets lost in payroll systems is our system allows for any portion of that employer saving to go back to the employee as an additional pension contributions. So in the example we're showing here, the employee, if they were to do nothing and just exchange what exists in their existing pension contribution under auto enrollment legislation. So, at the moment, 8% of qualifying earnings, 5% employee, 3% employer. Instead of having that as a 5% employee contribution, exchanging it for a 5% employer one, so a total of 8% employer contribution. What that does is decreases the individual's national insurance bill by £140 per annum. So they're better off by that amount into their salary. And then also saves the business this £2,625. But the business can choose to give 100% of that back to the employee, or can keep a portion of it, possibly a portion of it, to pay for administration costs for potentially, say, our services or your services as an accountant. But in essence, they could give that £262.50 per person back to the person as a pension contribution. So a combined employee benefit of £402.50 a year. So that's just by doing nothing but exchanging what exists today and what is going to exist as the increase comes in April. So finally, we are over to Olga. So sorry about that missing slide, but I'll hand over to Olga to basically demonstrate how this works and how efficient the system is.
Thank you, Brendan. That was very useful. Before I give you a simple demo of the software and the way how we implement salary exchange or salary sacrifice here at Husky, I always find it's useful to go back a bit and, remember how salary sacrifice or salary exchange works. Brendan already touched on it and explained the benefits, but a couple of things that we usually find when, we question why not all SMEs do it, right? Because why wouldn't you? There's 2 or 3 reasons, I will say. One of them is awareness. As I'm sure you probably know, a lot of SMEs have no idea that salary exchange does even exist. The other is in terms of resources, extra administration, contracts. So again, as we mentioned here, for salary exchange, because the employee is actually reducing their gross pay by the pension amount, there needs to be a change on the contract of employment or a site letter. So, you know, that if you don't have an actual process or some automation in place, becomes a bit of a tricky process. You might need an employment lawyer involved. You know, it's extra administration. And then the other reason is qualifying earnings as well. As I'm sure some of you might know, qualifying earnings, salary sacrifice usually doesn't go together. So that also pushes some employers back to not being able to do it. Our software actually does deal with that. So we can also deal with clients that are actually on qualifying earnings and still want to implement salary sacrifice. I'm gonna jump on and actually show you how it works in the system. But to finish the overview, as Brendan already said, because the employee is reducing their actually gross pay by the pension amount, what goes into pension is exactly the same, but because it goes as an employer contribution, the NI bill for both employer and employees reduces. Employers basically save quite a lot, as we saw. Employees get a lot more on their net pay. And an important point as well is the tax relief. Again, any high earners, if their pension is on tax relief at source, as most of them are, they actually have to claim that extra 25% on their tax return, which a lot of them don't do. With salary exchange, that tax relief, they get it straight away without having to do a tax return, which means that actually their net pay increases quite a bit on those cases as well. So it's worth mentioning that. I'm gonna stop sharing this and go to share a video of the software. I'm sure some of you might have seen that already if you have any clients that are implementing salary sacrifice with us. Cool. Hopefully you can all see my screen. And again, to kind of make salary exchange available to all SMEs, as you will see, we call it salary exchange. Sounds a little bit more positive than salary sacrifice, but you know, it really depends on the market. But yeah, to make that available to anyone, we made the process automated in-app. So what that means, when a client wants to implement salary sacrifice, we ask them for the NI reinvestment. As Brendan mentioned, they can keep the savings, they can give them back to employees. It can be 50-50, totally flexible. And at that point, employees. So that's what an employee will see when they log into the Husky app, because we know their salary, we know how much they're already contributing. They will straight away see the benefits of implementing and applying for salary exchange. What that means is reduces usually the job of payroll or HR to be doing calculations for each employee when they have questions and what will it mean for me? They will basically see that in-app themselves. The exciting point as well, as you can see, they can decide to do more. They can decide to increase their pension contribution levels, and they can do everything in app. There's also the option to do it as an amount. So if you have any employees that are playing with the tax brackets to make it more efficient, they can actually do it. And as you can see, real-time calculations on the benefits. They will see the details on the calculations. There's also some videos, FAQs. There's quite a lot of content, so they can go as as detailed as they want, basically. And then the main piece, as I said earlier, because it requires this change on the contract, this site letter, we incorporated all of this in-app. So the employee basically just accepts the change on the contract in-app. They also need to basically read the scheme rules, read the frequently asked questions, and that's kind of it. Once that's done, they have already applied for salary exchange themselves. What then happens on the other side, the employer will also get a notification to go to their own portal and countersign it, which you should see on screen in a second. So this is the Husky portal, as I'm sure lots of you know, and basically any employee request will be here and the employer just needs to accept it, and therefore it's countersigned. Worth mentioning, I think, not sure if I mentioned that earlier, but no one can go below minimum wage. So after exchanging an amount, so if we think any employee is going or might go below minimum wage, you will see a massive red flag here before trying to accept it. So yeah, it might be one of these scenarios where you might need to reject it, but 99% of the cases, it's usually just accepting it. Once that's done, the agreement is then signed, stored in the system, and not sure why this is not loading, but I think kind of, yeah. And you will see a copy of the agreement into the system together with, an audit trail of when was it signed, by whom, etc. The other point worth mentioning is that the same process happens when someone wants to do changes. So again, typical issues that sometimes we find in terms of compliance is when someone has changed their salary or wants to increase contributions through salary sacrifice. This process will all be done in-app. So there will be an up-to-date agreement with the new contribution percentages, and that will go to payroll as well. I'm sure most of you know, but in terms of payroll, the way it works is all in the same Husky portal that you usually use. And we also send a report every month with any new salary sacrifice agreements. And in terms of timelines, we do it usually for the following month. So if someone applies, let's say in December, the agreement will start in January. So usually quite straightforward. And everything is done the same way on the same portal. So again, we are the ones dealing with the compliance. We are the ones doing the uploads into the provider, communications, etc. So same as the process that you are used to. I guess just to finish, I thought a couple of things that might be helpful, maybe for you if you wanna, see how much your clients could benefit by going through salary sacrifice. I'm sure Gustavo will send you the links after the session, but we have this calculator on our website that basically you can play with. You can see set the number of workers, you can set their salary bill, and this will just highlight how much the company will be saving and how much average employee will be saving. And, we allow you to play with DNI savings as well. So the employer can actually do some checks on what they might want to do. Employers also have this information in the portal. So for any existing clients, they will see this banner as well that talks about salary exchange, how much they are already benefiting if they are already implementing, and how much they could benefit if they haven't. So that's all part of the software already, which usually some of the payroll users might not know about these things, but because you use the backend, but that's already there. So I think hopefully that gave you a bit of an overview. Please, Gustavo, Brandon, I will jump off now and let you finish with an example if I can find it. Give me 1 second.
Right, so we're back to Morning Limited. And I can see there's a question regarding tax liability for the employer. So yeah, the employee as well. So yeah, you're absolutely correct. We reduce for both, or salary sacrifice or exchange, reduces that cost for both folk. So here we have, so going back to that, we had the previous slide where we showed basically, and this is what we're seeing in the press at the moment, this big headline number, your NI bills going up by £9,258 and Rachel Reeves is destroying the economy, etc. Well, actually, it's probably a lot lower than that. Well, sorry, it certainly is for this company with 10 employees, where obviously we've got that increase in the employer allowance. So that's increased by £5,500. So if we take that £5,500 off that 9,258, we're left with 3,758. And then if the employer is to just implement salary sacrifice and, you know, these 10 folk take it up, we generally find 60–70% of people take it up, but when they're encouraged by their employer to take it up, and our dashboard obviously helps with that, they go to 100% because there's really no reason not to do this unless you're really going below minimum wage. So yeah, so that saving would go up then. So additionally, you save £2,625 by implementing this onto your workforce. They obviously get that £140 as well, individually. But ultimately, the total cost of the business has gone up by just 1,133. So it's not as dramatic as the press are making out, I think, for these kind of SMEs at this space, or certainly, you know, kind of the kind of 1 to 100 because they get this 5,500. But there's no question that obviously anyone with significant employee bases are gonna have a big effect to this increase to 15%. So we'd be saying to all of those folk, if you're not doing this on your pension contributions, i.e. you're not exchanging them, that there's really limited reasons why you wouldn't exchange. So we wanted basically to bring you through that today, hopefully quite simply. I think we're now on to the Q&A. I think Gustavo is going to kind of handle that. So yeah, over to you, Gustavo.
Hi guys, nice to meet you all. The first question is, let me just go through the top. So how can we communicate with our clients and the employees? So basically, we have all the information, the calculators on the website, but after the webinar, we'll send an email with a simple presentation that you can share with them. We have the calculator. I share with you the link of the calculator as well on the website. And we have email templates, videos, everything basically. So if you need anything specifically, you can just talk to all as well, and then we can provide straight away. And the next question is about if we have some case studies. We do have on our website. I'll share with you as well. And the third one is if can salary exchange be implemented in existing pension plans, or do clients have to move provider? So maybe this one all can answer.
Yeah, of course. That's exactly right. So you don't have to move pension provider. You can actually implement salary exchange on an existing pension scheme. The way we work with 9-10 different pension providers, so we can take over the delegate access of that scheme and implement salary exchange, salary sacrifice on it. So it doesn't mean the company has to actually move provider if they are happy with. As I'm sure you know, our service includes going through the comparator tool and seeing if there's a provider that might be better suited. So that's always an option as well.
Sorry, can I just jump in? It's Michael here, unverified user. Just answering Anne's query just about the timeline on agreement notifications. When we built the process, there was lots of logistical pieces. So you have obviously the worker, the company, payroll, pension, and we tried to devise a timeline that works efficiently for everybody. So we would allow the approver of the company at a certain period after the end of a application period, i.e. the company to approve. At that point, at the end of that point, we would send a consolidated report to payroll so that payroll aren't getting bombarded with transactions every day. They get one consolidated report ahead of payroll time so they can make one change in their software.
Thanks, Michael. And then obviously, Nicola, you've asked that question. I think I answered it, but yes, absolutely. What happens here is it reduces by implementing this sacrifice. There are no national insurance taxes on employer contributions to pensions. So when you exchange to an employer one from an employee, an existing your own one, if you will, but an existing employee one, that reduces that national insurance employee cost, and hence you get more in your net pay because of that. And then obviously from a company perspective, you're reducing your employment bill or the national insurance cost of your employment bill. So it's reducing by that figure. And then also, as we mentioned, the employer then has the choice as to whether they keep that saving or they give it back. Now, when we actually, kind of demonstrate our services to the employer, and we explain this, because it's obviously quite a complicated kind of thing, and you start to use jargon like sacrifice, etc. We're basic when we point out you can do anything you like. You can keep your administration costs as an employer, if that was per person, or as a business, or you can give it all back to employees. So any percentage of the saving, you can choose to do what you like with that saving. So we see it as a massive opportunity to help employees, get more in their paycheck, but also get more later on in their pension too. Michael, I think do we have one more from Anne for you?
Yeah, sorry, Anne, just on that, the process, as Olga went through, is that the worker would make an application, the company would get the company approver would receive a notification to say they have an action to complete. Once they complete that, that gets updated on the worker's app to say it's effective for the next pay period. At the end of the company's approval time, we send a consolidated report. If you're getting individual pieces, I'm not sure. Maybe I can discuss that with you separately and to see if there's something that's not consistent there. But certainly the report would go out at the end of the company approval period, detailing all the agreements that have been set in place for the previous month to be in effect for the next pay period. Yeah, but certainly I can touch base with you, Anne, and just see what you're receiving. Thanks, Anne.
Yeah, exactly. I think, Michael, yeah, you can contact Anne, because it might looks like probably her access rights are not the right ones.
Yep, make sure they're correct. Yeah.
Cool. I think Nicola asked if there's any maximum limits on how much can be sacrificed apart from the minimum wage. So yeah, exactly. There's the minimum wage piece, and then we also have the pension allowance, which is the 60K a year. Again, it's not a limit on how much can be sacrificed, but of course, it's the limit on how much you can put tax-free into pension. So kind of goes together as well. And probably worth mentioning, so apart from the minimum wage, another thing that employees might need to take into account is any other benefits that are using, their gross pay. Usually goes quite linked with minimum wage either way. And then we always mention things like insurance, mortgage, etc. Although lately, all clients that had employees going through that process, we found that most of the brokers and providers are actually happy to look at the pre-exchange amount. But again, it's something we always mention because you never know, right? But it's becoming less of an issue. I think
I would just add to that as well that you can exit the arrangement anytime with our system. So although, as Michael points out, it might happen in the next month, but there's no restriction. It's not like other HMRC approved schemes that need to be approved by HMRC, where you have time limits and amounts where you can go into it and out of it. With pension contributions, you can leave anytime. So you can implement it anytime and you can leave it anytime. So it's really fully flexible. And I think that point is often lost, that, oh, what am I going to do here? And can I get out of it? So we would be saying, obviously, if your bank for mortgage purposes is looking at it and saying, well, you have to reduce the amount of mortgage, then it makes no sense to us. I've spoken to many bankers, was an ex-banker myself, on that score, because your net pay goes up. So, but there are effects on life cover, and again, maternity and paternity pay. But generally, these are based now on your basic pay before any salary sacrifice on pension contributions. But again, we can exit you from that arrangement anytime.
I'm gonna stop you there because it's 12:30. We said we were not gonna go past the time. I think Tracy asked another question. Let's just go through that then offline and send a list of the questions and the answer, because that's a good one, SMP. But yeah, I don't want to keep people longer. So I guess thank you very much, everyone, for joining us. Yeah, it was great. We will send an overview as well and answers to the questions, especially the ones we haven't been able to go through. You have our contact, Michael, Brenda, myself, Gustavo. So any questions, anything we can help, you have it. So we can talk then. Have a good rest of the day, and thank you very much for joining us.
Good one.